Hello and welcome to FX Addicts Weekly Market Analysis. This is Tim, the Currency Professor, and today is Friday, June 28th, 2013, the last day of the month, and it has been quite the exciting month. So we'll give a rundown here first of some economic stuff. Economics today, we got some reports out of Japan today, kind of mixed overall. The big surprise was housing starts on a year-over-year basis, up 14.5%. That's the biggest number we've seen out of there in quite a while, so that's pretty good. Household spending, though, was down 1.6%, which was a disappointment. We were expecting up 1.5%. So overall, the news mixed. In Europe, French consumer spending was up 0.5%, and German retail sales were up 0.8%. Both much better than expected, and much better than last month's negative numbers. In the U.S., the big surprise was University of Michigan consumer sentiment numbers. Those actually came out at 84.1, the highest we've seen in a while, and very, very good numbers. So consumers certainly the driving force behind any recovery, and consumers certainly going a little bit stronger here every month, a little bit. So that's a good sign. Also out of the U.S., the Chicago Purchasing Managers Index, 51.6, slightly less than the 55.5 expectations and much less than the 58.7 from last month. So a little bit of a disappointment there. But consumer rules, so we're going to go with that. Next week, on Monday, we got the Tankan reports out of Japan. So those will always move the market one way or another. Expectations are fairly high for them. Positive 3 for the manufacturing, and for the non-manufacturing, positive 12. So that is, they're both considerably more than last month's numbers, so the expectations again are running a little bit high. On Monday we got a lot of manufacturing PMIs coming out from China to Europe to the U.S. So none of those though are expected to show any big changes. So shouldn't be much of an event at all. In the U.S., construction spending expectations 0.6%. As opposed to last month's 0.4, so we'll see how we actually come out with that. On Tuesday, the Australian Central Bank, the Royal Bank of Australia, meets, and they will decide interest rates. No changes expected, so it should be a non-event. However, with the Australian dollar being pummeled as much as it has been lately, they may make some comments, so just need to be aware of that. Also on Tuesday, factory orders out of the U.S. Up 2.1% expectations. 1.0% was for last month. So this month, again, expectations are a little bit high. Also, total vehicle sales. This also gives a guide in the U.S. as to how well the consumer feels, and is more of a sentiment indicator than really anyone caring about how many vehicles are sold. So kind of an important thing. That's an all-day number, though. On Wednesday, some more PMI numbers, service numbers out of Europe and the U.S. Really not expecting any big game changers again with those, so just waiting to see. On Wednesday, also in the U.S., ADP non-farm payrolls, expectations are for 161,000. Last month was a disappointment at 135. So see how the revision is for last month as well as the new number. On Thursday, July 4th, is a holiday in the U.S., so banks will be closed, and there will not be any reports. So the unemployment claims that are normally reported on Thursday will be reported on Wednesday. Also on Thursday, then, the Bank of England meets and to decide interest rates. Again, no changes are expected, and everything seems fairly status quo there. So really expect the language to be nothing different than what we've heard before. So kind of quiet. Then on Friday will be the big number out of the U.S., the non-farm payroll as well as unemployment. Number unemployment is expected to tick down to 7.5% from 7.6, and non-farm payrolls are expected to come out at 162,000. Last month was 175, so we're going to be watching the revision for last month as well as the number for this month for May. So I'm sorry, for June. That is it on the economic stuff. Let's look at the numbers here. We've had some wild swings today. being the last day of the month as well as the last day of the quarter, we get quite a bit of movement here. So with the euro, we were up most of the session and have since turned around here in the second half of the session. We're actually down 30 pips now, and as you can see here, we were quite a bit up. It really looked like it was going to turn around, and now we close down here. This is actually quite bearish, so we'll see how it actually closes for the day and for the week and for the month, but for the most part, it does not look very good at this point. On a weekly basis, this is now the second week lower, and really looking like we're probably turning over here. The mark there about that 127 level, just above 127, that is the key support level. If we were to break that on a weekly basis, in other words, close the week below that, that would be very, very bearish. Monthly, well, we're going to end the month on a very minor positive note, the way it looks right now, but with quite a tail there. So real indecision here. It's not really a great looking pattern at all. As a matter of fact, it's slightly negative. So we'll have to see how we open and then trade for the first week or two of July, but really doesn't look very positive there. Pound against the dollar, just falling further, down 64 today. Just been getting hammered the last couple of weeks now. Stochastic's pinned against the bottom. Really doesn't look like it's going to back up at all. If we look on the weeklies, second week now, very strong week to the downside. Probably looking like we're going to fall off. If we were to draw a support line, we could put one in right here. So we could get down to about the 151 area and still be in range for a bounce. Not really going to count on it, because if we look at the monthlies, we can see we've been kind of riding this this trend line, which was a support line. We're kind of riding it now on the downside, and it has become a resistance line. So with this month's action now, the middle part of the month, we rallied all the way up to that line and have fallen back. We're just barely negative now in the month. Really, it's not a good sign. Technically, I mean, if we wanted to get into this, we could say, well, it's a gravestone doji, and it's a very bearish sign. So we're not going to necessarily use nomenclature to describe it, but it doesn't look good. U.S. dollar against the Swiss franc, kind of unchanged right now, up about 3 pips. We're down, we were up, we've been all over the place. Got a nice steep angle going here, pretty much as steep as we came down. The problem here is that we're kind of looking a little bit frothy here. We have some kind of coming to a peak here. It's narrowing up, and that's not always a good sign. So we could turn over here. We would probably turn over and come back down and test this trend line, which is now about 93.60 area. So we could get down into there and then move higher. On the weeklies, well, we're still in the same range we've been in for the last 2 years. So kind of stuck here. We really thought we were going to break out here this last move up, and we did not. On the monthlies, we're actually looking a little bit bullish here at this point, but we really need 1 month here where we thrust up and close up well above the 103 level. And that would take us then to break these downtrends that actually, this one goes back 13 years, and the other one goes all the way back to the 1970s. So really looking for a move here on a monthly basis to close up high about 103 area or higher, and that would break those very long-term downtrends. We would then get some really good trading activity and a very good trend going. U.S. dollar against Japanese yen, up today about 90 pips right now, back above 99, looking fairly strong. We got this kind of V-shaped or curved bottom here, so really looking very good. But we're still got this Ichimoku cloud. We are starting to break out of the cloud, so if we can turn this around, close back above this trend line on a daily basis, that would be positive. On the weekly, same thing. We need to close a week above this trend line, and we should have really done it this week, but we were very hardly hit. We were very hard hit the last few weeks, so it is begrudgingly getting up there, but it's not quite done it yet. So next week, if we don't close back above that trend line, we could fall off again and test those most recent lows. Monthly, though, still looks very strong. 1 month pullback, we needed it. We've gotten it. Next month now, maybe we pull back again a little bit to this trend line, maybe down to around 97, and then it would be off to the races again. So longer term still looks very, very good. Euro against the Swiss, down a little bit today, down about 20 pips. We started to form this kind of U-shaped pattern here. It has not completed, so we could bounce around here for a couple more sessions, and then we rally up to around that 124 level and close up there. We then could see another reissuance of that upward momentum that we've had in the past here, like these last two times. So the next move will probably take us up to about the 128 level, which is just about up in here. So we could get up into there and then fall back again, kind of thing. But longer term still looks very, very good. We got a nice bottom forming there. Euro yen is right now up 97. Back above the 129 area. Looks very good. We bottomed out down here, and oops, sorry about that. We bottomed out down here and rallied up, kind of tested the lows, and now we're moving back up. So looks very, very good longer term here. We do need to get back above this trend line, much like the dollar against the yen. So if we could close up above that, that would be very good. Now on the weekly basis, this is second week up. Looking very good, looking like we're starting to recover. We did have 4 weeks down, so here we are, we're starting to recover. This could be the start of something. On the monthly, still looks very good. 1 month correction here. Maybe we get another small month correction, and then we could rally up again to that 137, 138 level that we've been looking at for a very long time. So really looks good longer term. I'm going to stick here on the Canadian as well as the Australian against the dollar. Both of these showing some good signs here. The U.S. dollar against the Canadian has broken out last week. We've fallen back a little bit this week in consolidating, which is not anything more than what's to be expected after a 3-day move like we had last week. On the weeklies, though, this is the important part. We've broken up above this resistance line. We're well above it, and we've closed above it, and we're continuing to move higher. So that's a very, very positive sign. If we move out to the monthlies, we can see how this whole pattern here, we made some lows back here, we rallied up, we've come back, we've tested the lows, we've consolidated here. So now it's very, very possible that we could be off to the races again. We could very easily run up to that 125, 130 level and ultimately exceed that, probably running to the 150 to 160 level eventually at some point. So this could be the start of something very big. Australian against the U.S. getting hammered again today, down about 150 pips. We rallied up for about 4 days in a row, then kind of consolidated one day with a slight downturn yesterday, and have since fallen off again now today. So longer term on the weeklies, we're just very nice angle, just keep on chugging down here. Same on the monthlies. We've broken now down below this kind of support that was in here. Clearly we're closing the month out well below that, so looks very, very strong to the downside. We could very easily end up with something like this, like we had back in 2007, 2008 here. So we could fall off now. Next month we could fall off substantially. I got a target of around 80, so we could get down there actually next month very, very easily. When this market moves, it moves, and it moves very fast. So looks like a very potentially strong move on this one. That is it for the week. If you have not visited fxaddicts.com, please do so. My name's Tim. You can certainly contact me, Tim at fxaddicts.com. I am available in the chat room. You can get a 7-day free trial offer at FX Addicts if you have never done so. And if not, we charge $97 a month for memberships, and we also offer several different courses. So please be sure to check those out, and feel free to contact me if you have any questions. Thank you.